Thanks, Tim, and good day, everybody, and thanks for allowing me the opportunity to give you an update on the Horizon Minerals story. The presentation you're about to see is on the ASX, ticker code HRZ, and on our website, horizonminerals.com.au. So Horizon, what are we? We're an explorer, and we're an emerging developer and producer, and we're focused in the Western Australian goldfields, so world-class part of the world to be looking for gold, developing and producing. We currently have just over 1 million ounces in mineral resource. Importantly, over 70% of that is in the measured and indicated JORC category, awaiting conversion through to reserve. A very dominant land holding, all within 75 kilometres of Kalgoorlie-Boulder. So we are looking for a centralised hub supported by a baseload feed and then a number of satellite operations to get us into production through the next calendar year. Very strong balance sheet. And we've just been working on our largest ever drilling program, from reserve conversion drilling through to new discovery drilling. Next slide, thank you. And again. So the snapshot there, you can see my current market cap around 77 million. We have $12.5 million in cash and 5 million in listed investments. We have no debt, and we have a very strong technical and corporate team led by Ashok Parekh, a well-known corporate finance entrepreneur in Kalgoorlie-Boulder, Peter Bilby, mining engineer and current chair of Independence Group, myself, a metallurgist by profession, and Grant, Julian and David, mining engineering, corporate finance and geology. So a very strong technical group and very tight with very low overheads, and for us it's putting as much money into the ground as possible and growing our business. Thank you. Next slide. So the project overview, you can see on the map on the right hand side, everything in red is owned by Horizon 100%. You can see the super pit. We essentially surround the super pit, and we have a number of key deposits. The base load feedstock at Barara, just off to the right of the super pit, and 5 odd satellite operations that we're bringing in. And if I move to the next slide, I'll take you through the overarching strategy of what we want to do. So we're working on a very conventional growth strategy. We want to have developed an initial 5 to 7 year mine plan. That is underpinned by a base load feed, which is the Barara ore body with a current 450,000 ounce resource at 1.3. Low strip ratio, very good metallurgy. And that's where we have designed the mill. It's a 1.5 million tonne per annum conventional processing circuit that will sit right next to that main baseload ore body with power, water, licenses, all in good shape for a development decision at the end of this calendar year. So supporting Barara around 1 million tonne a year is 500,000 tonnes per annum coming from a number of open cut and underground satellite operations. And you can see them listed there in the graphic. Teal, Binduli, Kalpini and Rosehill all have higher grade, all in close proximity to the centralised mill. So we're working on our feasibility study to consolidate all the updated resources and reserves to be in a position at the end of this calendar year to make a development decision for that 5 to 7 year initial mine life at around the 60 to 70,000 ounce per annum rate. And we see a lot of opportunity to grow the business organically to that 100,000 ounce per annum target through the oncoming years. Next slide, thank you. So Barara, we're in a unique environment in Kalgoorlie-Boulder where we could actually trial Barara, the asset, before we committed to the larger scale development. So not only did that trial generate $3.6 million in cash, more importantly for us, it actually de-risked the project and allowed us to understand the geology, to know that day in, day out, the grade is going to come out of the ground as modelled. So we were very happy with the trial. The metallurgical performance was excellent. The geological reconciliation was excellent. And that enabled us to update our independent resource estimate to that 450,000 ounce mark. So that provides a very solid de-risked baseload feedstock, which will be the mine life generator on top of our satellite operations. Thank you. The Barara ore body at the moment on the right hand side is in the middle of the page. You can see 1.5 kilometres of strike length. We own over 25 kilometres of strike length, and the task now is to look for near mine extensions. It's a fantastic geological setting for finding more gold And we think, we're going to be in this greater Barara area from the south to Golden Ridge all the way up to the Kanowna Belle mine. It just needs drilling. Is the goldfields tired and well drilled? The answer is no, particularly below 90 to 100 metres of depth. And that's our focus. And we are currently putting 13,000 metres of drilling into this project area as near mine extensions and new discoveries. Thank you. I won't talk about the next 3 or 4 slides in a lot of detail. I'd encourage you to have a look through at your leisure. But we have very strong, very good grade, open cut and underground satellite deposits that can complement and support the base load feed at Barara. So I'll just move through those slides, thanks, through to slide 15, and talk about our most recent acquisition. Next one, thank you, is the Cannon gold deposit. So, we've been acquiring assets over time, and we'll continue to do so. And the Cannon is a great example of a fantastic acquisition. It has a development-ready underground running 5.2 grams a tonne. It's 7 kilometres away from the centralised Barara plant. You can see on the image there with a fantastic exploration upside. And we're going to be completing this transaction over the next 30 days and then moving the rigs into this area to look for not only underground extensions, but strike extensions along the Bullong South area and Glandor and Kawana. Thank you. Penny's Find was a joint venture we entered into this year as well. This is a great and unique opportunity to be actually moving into production. It has a fantastic resource and reserve, 7-gram underground ore body. It has license for underground development. It has a toll mill agreement already in place. So our plan with Penny's Find and our JV partner Almanex is to get this ready for development in the September quarter this year, move into a decline development in the December quarter, and be producing from this asset as we are working with our feasibility study in parallel. So I don't know too many companies that can actually be in production as we have been over the last 3 or 4 years, avoiding dilution to shareholders and generating cash to fund some of the equity component as we move into development and project financing. Thank you. On the exploration side, we have fantastic 1,100 square kilometres of tenure on major geological structures in a world-class gold-producing goldfield. It's where we've all been for the last 20 or 30 years. We've stuck to our knitting in this area because it has so much more to give. So we are embarking this year on 50,000 metres of new discovery and resource drilling, and that is about a half of the way through. The challenging part for us right now is the delays in assay turnaround time. So that is going to lead to a massive amount of news flow over the next 6 to 9 months. We're seeing about a 6 to 7 week assay turnaround, which in turn delays some of the resources and reserves, but it generates an enormous amount of news flow. And we've been having up to 4 drill rigs, air core, arsenic and diamond on the property. Thank you. This is a great example, and we've released some new results recently, and there's some fantastic grade here, very shallow. How has this not been found yet? It's because it's had multiple ownership over a number of years. We've consolidated it at asset level, and we're out systematically generating targets and then testing those targets with air core, following up with RC. So this is a great example of finding something brand new in the goldfields, and there's a lot more drilling we're looking forward to doing in the Windaddy area over the next 6 to 9 months. Next slide, thank you. So that's the gold side, and I think again we're in a unique position where we have exposure for our shareholders in a number of different commodities. We have one of the world's largest oxide vanadium projects in joint venture in central Queensland with our JV partner RVT. They've completed a PFS. The vanadium price is starting to move higher, and we're starting to see an enormous opportunity here for exposing ourselves to vanadium. And getting this thing into production for not only the steel industry, but certainly the emerging vanadium redox battery market and the energy metals of the future. On top of that, we have a 20 million ounce silver zinc deposit right next to Barara. That DFS is now being dusted off and worked on. So again, exposure for our shareholders to not only our emerging gold business, but silver, zinc, vanadium, gold, and and also copper with our Nunati Well investment and uranium and gold. So a lot of different exposure, but our focus and our without distraction goal is to get our gold business up and away at the end of this calendar year. Next slide, thank you. Timeline and our milestones, again, it's all about news flow and more news flow. So an enormous amount of drilling results to come to market over the next 6 to 9 months. We have new resource updates coming out. Barara is complete, Rose Hill is complete. We'll have Binduli, Till and Kalpini coming, moving through to the end of this calendar year, where we want to complete that consolidated feasibility study, be making a development decision and be moving into production at the back end of 22, early 23. So a lot to come. Thank you. Next slide. So in summary, I think a very experienced board that's sticking to its knitting and concentrating all of our experience and effort into building a gold business within a 75-kilometre radius of Kalgoorlie with a centralised processing plant. Very strong balance sheet. We are fully funded all the way through to that development decision. One of the best strategic land holdings in the Kalgoorlie-Boulder area, and a market cap of 77 million, which is about a $60 EV per resource ounce, which compared to our peers is quite compelling. Our shareholders have exposure to our emerging gold business and particularly to our other non-gold commodities that we will look to monetize and minimise shareholder dilution as we move into the next phase of financing a processing plant. And with that, I'll leave it there. Thanks, Tim.
Thanks, Jon. There's obviously lots of cycles you see, and you've been in the game for some time. How busy is it out there at the moment in terms of getting access to rigs? You spoke about what's going on in the labs. What about the pricing of the assets that you're looking to pick up as well?
Yeah, I think with the gold price sort of where it is and you know, the consensus view that it's going to stay where it is or get better, the access to drilling rigs is difficult but doable. The prices of those drilling rigs have stayed relatively competitive. I think labour is one of the biggest issues that are facing us. So we have access to rigs and we have access to the technical people, but what we're finding is the general labour market, drillers, offsiders, people that can work in labs and do the sample prep, that is an issue that's facing us, and I think probably facing everyone in Australia at the moment in the current environment. So we are getting access to our rigs. We've got long run contracts with fantastic drilling companies, and the issue we all have at the moment is arms and legs and labour in general.
And you've made divestments in the past. You've got a lot of different assets, different commodities. Is that a way of realising value in regards to what you've done for shareholders in the past?
Yeah, so we've been in production and we've been divesting where it makes sense to generate cash to avoid dilution to shareholders wherever possible. So that will continue. Our non-gold assets can be a source of funding for our gold business. But we like to think we're pretty good at gold. We don't pretend to know about all other commodities. And in time, at the right price, we will move those on and use those funds to get our gold business up and away to that 100,000 ounce per annum mark or better.
Another question here. What's the best way forward? Is it best to kind of aggregate ore feed for existing third-party mills with spare capacity, or to build your own plant, or to do both?
I think every time we run the numbers, it's telling us that a mill needs to be sitting right next to Barara baseload feed. Third-party mills don't have a lot of capacity at the moment, with a lot of people putting dirt into those third-party toll mills, and the margin that we are giving away for use of another person's mill is significant. So the operating cost when we buy a spot into a toll mill versus our own mill is very significant, to the order of $300,000 or $400,000 an ounce on our cost base. So for us, it's getting the mine life right, getting a 5 to 7 year plan, and then hitting the button on a mill. We've got it costed, we've got it designed, and there'll be a lot of news coming out on that front over the next 3 months. And
your hedging policy, just the last question on that.
Yeah, hedging, it'll come up in discussion, no doubt, through the financing phase on the debt side. For us, our strategy is hedging is for risk management and risk management only. And we would see that a modest amount, 25 to 30% of hedging is the right risk structure for the business as we see it, but also maximising exposure to spot price, which is a lot of the feedback we get from current shareholders.